What's going on? Welcome back to the channel. So today we're going to talk to you about the top 5 short squeeze stocks that you need to add to your watch list going into this upcoming week. So I'm going to go over all the things that you need to know, but first make sure to hit that thumbs up, and with that, let's get right to it. So starting off, going into this week, the fear and greed index is under the fear category, so it has improved quite significantly from the extreme fear, so meaning people's appetite for risk is improving, and that's apparent based on what's also been happening in the broader market. This upcoming week, a lot of big data points that could move the market. So you do have, starting on Tuesday, JOLT numbers, GDP, PCE on Wednesday, manufacturing on Thursday, non-farm payroll, and also unemployment on Friday. So I did do 2 videos. I did a SoundHound video and also SoFi, put them out on Sunday. I did go into a little bit more depth on a lot of these data points, so if you are kind of curious, definitely pop over there and take a look. Aside from that though, you also do have a lot of big companies unveiling their earnings, so that as well could move the market. And then finally, tariffs. So potentially we're going to see some actual deals this week, all of which could really further push the market higher. A lot of the stocks I've already talked on do already have some pre-existing good momentum, so that's kind of one of the factors that I typically look at, in addition to, in a lot of cases, shorts just being overextended. So getting right to it, SoFi. So sitting at $12.88 over the last 1 year, up 69.7%, and then over the last 5 days, up 16.75%. Then over the last 1 month, it is down 5.6. So having some pretty good momentum. They do have their earnings coming out on Tuesday before the market does open. Current estimates are this, so 3 cents for the earnings per share, and then 738 million for revenue. But based on this, 13.55% of the free floats being shorted works out to be 145.98 million shares. Shorts have been really doubling down. Even based on the last report from the NASDAQ, it did go from 137 to 146.78 million shares. So shorts are really doubling down on SoFi, and I think why they might be doing that is historically, post earnings, regardless of the results, SoFi does sell off. But if you have a lot of good momentum in the broader market, such as potential deals from tariffs and also just many other things, you could have the market really pushing everything higher, as what we've seen over the last little bit. And if SoFi does hits a home run earnings, then you could see shorts which are somewhat overextended right now, really start to panic. So again, SoFi typically isn't a pure squeeze play or anything like that, but given the circumstances, I feel like it does need to be added to this list. And right now there is in excess of 10 million shares available to be shorted. Cost to borrow average, or cost to borrow, is fairly low, 0.25. So nothing really crazy to be kind of wary about for that. And the reason why I do bring up the available shares is typically if there is a stock with limited supply, you could see some buying coming from big money, BlackRock, Vanguard, a lot of the other big names, as they like to buy stocks just to lend out. So that's kind of why I'm bringing that up. Won't really be happening with SoFi because cost to borrow is fairly low and there's already in excess of 10 million. So again, something to keep in mind, but this is stock number 5. Moving on to stock number 4, ticker OMEX. So this one on Friday alone went up 77.21%, and this is because of what Trump did recently sign as a executive order. Over the last 1 year though, it is down 58.52. In case you're curious, this is what they do, so feel free to pause it and read through it. But we are here because of this. So 18.3% of the free float is being shorted, works out to be 3.78 million shares. Friday, shorts did increase 679,000 shares, so they did increase their position by 21 or 22%. Short score, higher the number, the higher the likelihood of a squeeze happening, is sitting at 80.23. And then cost to borrow average, which on a side note is a annual rate, not a daily rate, is 169.23%. Through IBKR does indicate roughly around right over here, 25,000 shares available to be shorted. So you could see some buying going on this week. as big money will buy it just to lend out. So this is stock number 4. And so moving on to the next stock, you have ticker LUCK. So sitting at $9.43, up 2.39% on Friday. Over the last 1 year, down 18.23%. And then over the last 5 days, up 12.26%. So a lot of abnormal volume and a lot of good traction being had with this stock. This is what they do, so feel free to pause it and read through it, based out of looks like VA in the States, but we are here because of this. So 37.13% of the free float is being shorted. Works out to be 6.36 million shares. On Friday, shorts did return 250,000 shares. Cost to borrow average 16.14, and then short score is 91.82. So the higher the number, the higher the likelihood of a squeeze happening. Through IBKR does indicate 15,000 shares available to be shorted. So not only is it starting to gain some pretty good momentum, but I feel like there could be some buying coming from big money, as they will buy it just to lend out some stock. So this is stock number 3. Moving on to stock number 2, ticker is AGRI, sitting at $2.24, up 24.84%. Just on Friday alone. Over the last 1 year, down 85.42%, and then over the last 5 days, up 69.7%. Fairly low market cap, so keep in mind in a lot of cases I don't really bring this up, so just again pause it and go through it if necessary, or just do additional due diligence and whatever else. But this is based out of Vancouver, Canada. This is the company profile. So ag products and services, 3 employees, founded in 2017, but 28.14% of the free float is being shorted. Works out to be 487,000 shares, and that is exactly what the market does like to squeeze. Heavily shorted, low float, meets the criteria for that. Short score, again, higher the number, the higher the likelihood of a squeeze happening, is sitting at 82.37. On Friday, shorts did return 94,000 shares, and then cost to borrow average is 381.97%. So fairly high stuff for that. And then one thing just to keep in mind is there's about 10,000 shares available. So this one for sure will be having some buying in the foreseeable future, as what we have seen in the past, how it usually jumps from 0 to 10,000 and then 0 to, I think I saw like 100,000. So definitely big money is all over this. So let me know your viewpoint on that. So this is stock number 2. And then going into this week, stock number 1, ticker is CSIQ. So Canadian Solar, sitting at $11.15, up 20.15%. Over the last 1 year, down 23.1%, and then over the last 5 days, up 53.17, 737 mil market cap. And this is what they generally do. So semiconductor is the industry, 22,000 employees, based out of good old Canada, but 25.97% of the free floats being shorted. Works out to be 11.73 million shares. Shorts increased to 428,000 shares. Cost to borrow average, very high, 581.58%. And then through IBKR does indicate roughly around 1,000 shares is available. So at the end of the day, these are the top 5 I feel have a good likelihood of a squeeze, only because in a lot of the cases, shorts are somewhat kind of overextended, and plus you will have some good pre-existing momentum, and if the market goes, everything goes according to plan, and that we do continue to move higher, these stocks will just continue that good momentum. So even putting shorts in a more of a difficult kind of scenario. So all in all, let me know your thoughts. Don't forget to add them to your watch list. One final thing, if you're looking for some kick-ass buy signals, pop over to my Patreon. I give buy signals on stocks, options, crypto, many of which have been absolutely on point. So definitely pop over there and take a look. With all that, appreciate all of you watching.